The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, this December day of Friday, December the 14th. Yep, December the 14th. And, wow, great 2 hours here on TFNN as always, just leading up to my show. Gives me incentive to be able to come in and just enjoy myself, knowing that there's been a great momentum built up, and I try to follow that up. And Friday is a very interesting day because out of all the shows we have going on from 9 a.m. till 6 p.m. Eastern Time daily, Monday, Tuesday, Wednesday, Thursday, Friday. Friday is the day we look at our health. Friday is the day that Nico DeHaan comes on, and just really interesting. I'm always a little kind of upset because I try to get a snack before my show, just because I'm up real early. So by that time, for me, it's kind of lunchtime. And then Nico comes on, and I say, oops, double oops, triple oops. At least I exercise. At least I'm playing my tennis 2-3 times a week. What can I say? Fabulous show. You just wanted terrific information, and then it was straight. We've got Daryl Martin. You heard him this morning with Tom and Steve, and they're just a fabulous show. Just great techniques he talks about. And then another great technician is Dave White. Dave comes on straight after Daryl, and then you got the 3 o'clock to 4 o'clock show. It's a wonderful technician who uses the Investor's Business Daily approach, plus his own, of course. You've got Ken Shreve, and then Tom O'Brien. Great Tom O'Brien comes in at 4 o'clock till 6, wraps the whole thing up with these insights on what's been and what he expects. Just great programming. Not only that, we've got Tiger Dollars. I'm going to just spend a moment here talking about Tiger Dollars. We've got Tiger Dollars. And the Tiger Dollars, really, it's not just Tiger Dollars where you'd get a tremendous boost. You'd buy one and you'd get 1 plus whatever the percentage is. In this case, you're getting 25% extra, and that's not the kicker. The real kicker is Salvation Army gets 5 to 10% of your amount that you paid here using your Tiger Dollars. And time's running out. You got until the 18th. So go to the front page. Check it out. This is the time to give yourself a treat. Give the Salvation Army a treat. And at the same time, continuing to allow us here at TFN to be able to give you great program with a huge diversity of not necessarily opinion, but of technical, technical. How can I call it? It's not just a showcase, but it's a technical. I would even go so far as to say a library for those of you. I know that for those of you who listened a long time who emailed me to say, "Wow, thank you. I'm using your 9-period moving EMA. I'm using your 200. I'm using this. I'm using that. I use volume. I use Fibonacci. I use the butterfly, the target." I love that because it makes it yours. And believe me, when you're in this business a long time, you learn that the technique that you've learned from others not only derives a benefit by coming to you, it's exponentially added to your own knowledge, to your own incremental learning. Sometimes more than incremental. Sometimes it's it's a huge learning curve, up and down, when you're right and wrong. But in this case, what it is it's building the strength of your own technique. After all, you don't want to have to call up every single day or whatever it is to talk about something that you are learning and building and then have formulated into a plan. You've already got your plan. Now, you might want to call to see where things can go to and where you might be wrong. But the actual implementation very often derives from your own knowledge and your own expertise. So keep that in mind. Not only that, if you go to the front page, I'll just show it right here. You've got your Tiger charts, but I'm going to, the charts I'm showing, this is the E-mini, which has gone to a peak. This is the March contract. But look at this. This is the right here. I'm getting, oops, not here. This is, where did it go? 120 minutes. There it is. 120 minutes. And I got a couple of great questions in the den. And in the den, what happened was there were questions from yesterday that I said I'd get to, and people have two questions that are really pertinent. Adamant asks, I showed the Apple chart, also the E-mini 120-minute chart. Looks like it's got an H, and the question is, what if it doesn't, or what if it does test the left side low? That's very important. I'll get to that. And the other question that was very important was, I had spoken about in the chart pattern that I call the cup and handle pattern that I had shown based on the chart that I show every day to my subscribers of the opening call. I said, I'm anticipating a cup formation forming, and this was when the Dow was maybe down 16 or maybe up 10, I don't know what it was, yesterday between 11 and 12. Then it started to pull back. I said, I'm expecting a pullback. I've got leg E, a doji candle that looks like it needs to pull back. I'm expecting a pullback, and we're going to try to plan certain things in my opening call. And at that point, 5 out of my 5 long positions in the opening call were long. As I'm talking right, and the market still tanked. And listen to this. 1, 2, 3. 3 out of 5 of our long positions are up again today. All of them are in winning positions from when we entered. And one is down just 1 penny, and the other is down 4 pennies. So the technique that I talk about is a technique that I use in my opening call. Let me just go straight to the point that I wanted to make. Right here I'm showing, bam, right there. There's Tiger Real Estate Fund, and under it says half of Basil's CD book. Now, I actually have had to send to TFN a batch of CDs because I had an inkling that there were a lot of people that were interested, and at the time they couldn't either afford or they just didn't feel comfortable signing up for my 2-day webinar. But they emailed me and said, could we get the CD? We're really interested. We've seen you talk about it for years, and we know a lot of people that have used it and use it to tremendous advantage. So we're interested. I had one email saying, I'd love to. Do you have any special going on? Well, I put together a special. This is the special of all specials. I've never done this before, but I'm so excited always to be able to introduce. There, Saratoga Bob says in the den, CD is worth it at full price. No, Bob, I thought about it and I said, I'm going to do something special. It's just for new people who want to get the CD. You save 50% on Basil's CD book plus get a free month of his newsletter. So act now, get a 50% off on Basil's CD book plus get a free month of his newsletter. Hey, didn't it just say that? Yes, the opening call. And it says learn more about it. Well, learn more about it is right there. And more about it shows this. It shows the ChapmanWave. There's a chart that we put up a long time ago, and it shows, I didn't put everything in, but it's got the arch formation, it's got the restart, which people talk about all the time. What happens when you get a buy signal and it fails, but it doesn't actually take out the left side low? Well, what happens is it actually restarts with either a brand new buy signal or it's a continuation pattern if certain things happen. Oh, I mustn't move my mouse. Point just there. Right, there it is. So this is a fabulous example of so many techniques. And let me just do one thing quickly. In this particular pattern, the objective is to get to a D. And if it goes to an E, that's fine, but you still have to be very careful between D and E, unless certain things happen. I explain that in great detail. It's called the instant restart, ChapmanWave instant restart, because you get it in there's no other system that uses this. And now, not only that, but that says that you can start over again and go to a brand new buy mode, even if you don't get the instant restart. If you get a new signal, based most probably on the MACD and the stochastic, or based on the pattern that's forming, you can get a brand new A to B to C. What is the objective? To go from the lowest, most obvious low bar. The whole bar must be the low bar. And it's only called the low bar because the very next bar has a higher low bar. And if the whole bar is higher, that makes it a V-shaped bottom. Okay? That starts a move. And then what happens? You get the same thing at the top. And at peak D, that's where you've got to be most careful. And if you just traded buy signal to buy mode to D and get out over and over and over, you can actually make a living doing just that. I have people that got this system, really nailed it years ago. I'm talking about 4 or 5 years ago, maybe 6 years ago. And what they did is They traded. One in particular just uses it in gold stocks. I'm not sure if he's still doing it, but he was just only doing gold stocks. Gets the buy signal, buy mode, gets out at D. Buy signal, buy mode, gets out. If he's wrong, tight stop, he's out. And he's done very, very well. In fact, he started funds for his grandchildren based on this technique. I'm sure he's using other techniques as well. So please consider it, because what do you get? You get not just not just the CD for half price. Instead of $249, you get it for $124, but you get for $128. I throw in my opening call for 1 month, so you can actually see what I'm looking at and why I'm looking at it. So I just want to get that out the way. I want to go quickly through the numbers here. The Dow's up 2, and what did I say in my opening call? This is what you get in the opening call. Look at this. Opening call. Let me just go here if I can get to it right there. This is today's opening call. Here's my overview section. I go through that. I actually add a little. It wasn't politics. It was the politics behind politics a little bit. And then I said, a Dow, what am I expecting? A Dow plus 20s at noon might deliver a narrow close between plus or minus 20. What's the Dow right now? Plus 0.53, up 1. S&P is down 3, but I was talking about the Dow. And that's what we're looking at. So that's all that information. Plus, I give an exercise. I gave an exercise that I was asked a question about this particular stock. And I showed a whole exercise on Tractor Supply, TSC. I do so many charts, didn't even remember. Just to show, there were no trades, no nothing. I was just asked about it. I showed the huge gap between 87.60 and 79.96. I showed the A to B to C to D, then the instant restart, which also turns out to be, for those of you who did my webinar on Thursday, this past Thursday and Friday, remember I talked about the ChapmanWave flat base restart. I didn't want to get too technical, but for those people that have already done some of the ChapmanWave, I explained what it is. Well, this is a perfect ChapmanWave flat base restart. Goes to peak C, then you wait for the cup formation. It goes to D at 103.74, and that was in early October, and then it comes down. Lower highs, lower lows. Lower highs, lower lows, all the way down with a trend line with the left side, right side price time match. And I suspect that this stock is going to work its way down towards maybe not the 79.96 to fill the gap right now, but that eventually will get filled, and it looks very, very weak. Anyway, and I threw it in, spent a lot of time on it, just because I wanted to someone asked me about it, so I explained the whole process and what technicals, and look at the MACD, still quite weak, and the stochastic is only at 32%. So that's the kind of thing that you get. And now, the numbers are continuing the comp because of Apple. Apple's still very weak. I mean, that was the question, I think, in the den about the left side, right side, price, time match, etc. I'll get there. Apple's down 15 at 29.77. Gold is only up 0.70. I just don't see gold going anywhere. I think it's just lower highs, lower lows, lower highs, lower lows. Silver's up 0.7. The high-grade copper is up $1.90. It's in this trading band. I think right now that's important, and bonds are up 20 ticks. The other thing I will talk about later in the show, I'm going to talk about Joseph Woodland and Boston College and...
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connect sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and we're going to go to our first caller. There are a bunch of things I will talk about during the show later on, and we'll go to our first caller, who is Mike in New York. Hi Mike, how are you?
Good, how are you doing today?
Very nicely, thank you. What would you like to look at?
First, is George still around? I miss hearing from him on the show.
Who?
You know, George from New York.
George. Yeah, I do hear from George periodically. In fact, I cannot believe I mentioned this about 3 weeks ago. I had it on my list about 2 weeks ago. I know I showed the charts, and I can't remember whether I showed the charts of the during one of the breaks, because I know I did work on it. But he had emailed me just to say, folks, George is one of our many Tigers, like Mike, who has a good eye for certain stocks. In George's case, it's usually the long side. In Mike's case, he's very good at picking shorts. And George has said to me, have a look at the foreign markets. Well, I've done a ton of work on those foreign markets because I'm transferring some of the charts to my white background charts. For instance, Hong Kong has had a spectacular move. It's in leg E up as we speak. It's gone back with all the crisis and everything around the world. It's gone back exactly to a left side, right side price time match from April the 8th of last year to just nicking it on the upside. Last week, which was, is that last week? Let me just double check. Yeah, 19.67, and here we are. We hit 19.46. We're within 31 cents of hitting last year, with all the stuff, the turmoil in the last year that's gone on, hitting the high of April of last year in the Hong Kong iShares. The EWT, Taiwan, has had a fabulous move back in the weekly chart, back to the April high of this year. The EW, what is it? I did them all. Now, let me just give you... Oh, EWU, which is the British market, made an all-time... Not an all-time, I didn't mean to say that. Made a recovery high. This is going back to August of last year. And it's just hit that that ugly candle of the 5th of August of last year. 1798 was the high, and the high before that, the week before, was 1820. Well, the high this week has been 1812. And the monthly charts, and I have to tell you, Mike, that if I was not reading the paper, if I was just looking at the charts, there is so much evidence that to say the market is dying to go higher. It is being interrupted in all these moves by this fiscal cliff talk, and every time Boehner's come on, the market's seen a pullback. Whether it's got nothing to do whether one agrees or disagrees with Boehner, the reality is that almost every time he's come on TV, the market pulls back because everything's been stalled, and the market perceives that the stalling process, and believe me, I don't think this is going to be an easy thing. I see no way that it's just everything's going to sail through in happy land. I think there's going to be some turmoil here, which is one of the reasons why I'm looking at these foreign markets and I'm saying, this is quite amazing. I mean, Japan, EWJ, doji candle high. It's testing the breakdown that is from May of this year, the 952 high. Right now it's at 939, made a doji peak E, pulling back. The technicals are still very good. So, yes, I've heard from George, and he told me to look at the different overseas index, and absolutely, I always look at the EWS, which was mentioned in the den. It's Singapore. I don't have it notated on this one. I do on the black background. Actually, I was sure I had it here. I've got to find out if I'm not losing my charts here. But yeah, it's been a fabulous move up. And the last one that I want to look at is, if you look at the FXI, which is China, this morning is making leg E up in the daily chart. Look at that, E up in the daily. Beautiful cup and ladle breakout, ChapmanWave cup and ladle formation. Technicals are fantastic. The weekly chart has improved tremendously with a stochastic at 87. This chart looks like it's making a U-shaped pattern and wants to test the high of 40.7, well, the area of the high between 39.30 and 40.74, and right now it's at 39.35. So yes, I did hear from George, and he gave me an opportunity to do what I should have done before. The stock you wanted to look at is...
DineEquity, DIN. It's Applebee's
okay.
and
We'll be back, folks. We'll be back. We'll be back with Mike in New York. We'll look at DIN, and that's DineEquity Inc. trading at 61.40, down 10 cents. And we'll be back with Stacy in Evergreen, Colorado. Ooh, I want to look at that stock, Stacy. I hope you can stay on the line. I'll get you soon.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians, just running through a whole bunch of charts during the break, questions that I was asked, and right here, we're ready to go back to Mike in New York. We're looking at DIN. And, you know, I don't think I have ever done work on this. At least I don't recall. A Dine Equity Inc. trading at 61.40 in a rectangle formation after making a peak. I'll just show the chart right here. And that was it's a perfect example of a right arm extension. ChapmanWave, right arm. Now, I can't raise my arm, which I usually do when I mention it, because I'm typing with 2 fingers. Right arm extension right there. And one of the reasons why this is a fascinating chart is because the rectangle formation has seen the technicals failing in the daily chart, while the price is held up, almost held like a magnet against the 9-period exponential moving average. The weekly chart has made a peak E. The MACD is turning down. Stochastics at 79%, which is under the 80 that I like. And the on-balance volume is suggesting that there is further to go to the downside. The 9-period exponential moving average, which is being tested this week at 60.76, was the low, in fact. Now it's actually 60.77, so it went under it by a penny. And the monthly chart, now this is a beautiful looking chart. The monthly chart has made, folks, there are a lot of charts like this, and keep it in mind that what's very important about a chart is if it has made a serious top, which this one did back at 71.70 cents in August of 2007, and then plunges to a low of 5.24 in February of 2009, that is a huge hit. Then it takes its time and it goes peak A. Remember, the lowest low bar is where you start the count. That's a 720. I keep saying it's 524 in February of 2009. And that starts leg A, goes to the 200-period moving average. That's that purplish line. Pulls back, makes a cup. This is what's called a cup and ladle breakout formation in the monthly chart, which should take you to a D. What happens is it takes you to a B, pulls back underneath the 200-period moving average, and then soars to peak C and D. Pulls back, and then it treats the 200-period moving average as support, and then it goes peak A, B, and now this is E, because I'm taking the previous D, I'm continuing that, or it could be brand new peak C if there's no new high this week. But the scallop formation, this beautiful cup formation, has been repeated once again, and it's a breakout pattern which says if you take out the previous lip high, that is the high of, in this case, February of 2011 at 60.11, and there was an opening round number 52. I'm not going to spend time right now talking about it because it takes a little time, so I won't discuss it maybe some other time. And then breaks out, you can expect there's a good chance to go to leg D, especially if the technicals are strong. Well, it's way above the 9-period moving average of 56.39. The MACD is good. It's making an M formation. It's good. And the stochastic is at 93%. So what are we looking at? We're looking at a potential test of this area that I've shown in the chart. This gray, red line was the left side. Right side is the right side price time match. The gray line, you'll learn how to get the diagonal inside wedge, called the ChapmanWave inside wedge. Why? Because it uses certain price points to be able to target where you'd be looking at. So it targets where? Right here, it joins, and it says this month is the month that it should try for 71.70. Therefore, we have to look at the weekly and say, is it possible? Is it really possible? Well, this is Friday, and there's now two weeks to go or so in the trading. It's in the trading month, and it's testing the 9 EMA at peak E with a fairly wide-legged doji. That says there's a chance that you could sneak above the high of 64.94 with a really good chance that you're going to come back and test the body of the candle between 62.48 and 63.05. But if you close, I'm talking about you being the DIN, at any point underneath 59.61, that gap with the low of 59.58 to the high of previous day of 58.22. In other words, the 58s to low 59s will be an area of key support as a rectangle formation forms. And lo and behold, that's exactly what we've got in the daily. Now I can ask you, Mike, what are you doing?
Well, after your review, I think I'm going to wait until the end of the month and see if it makes a move one way or another. And
because I know that you like to position yourself and you're not afraid to add to a position at a certain point. My suggestion here is that you can do one of three things. One is you can just wait and say, you know what, because this could be a very serious peak in the monthly chart, I've got time at any point. The risk-reward will change a little bit, but at any point I could get into the sell mode if it really cracks the 58 support. It's not far away, 2.5 points or so. If it does that, then I wouldn't say it's all over, but there's a really good chance that it's made a pretty significant top. Number one. Number two is, if it moves higher, it says, be careful. That rectangle formation says there could be one more squeak above 65 to kind of test the previous high, and then you can be looking at a short, because these double tops have been formidable in many stocks. I love to look at the pattern that's going right across the board in so many stocks. The other is to say, you know what? I might miss an opportunity to go short if I nibbled either here or 50 cents or 80 cents higher within this ballpark. I've got the opportunity that on any, look for the earnings report. That's number one. I don't know when that's coming out. But the most important thing is if it suddenly starts to take a dive, it actually could give you 3 points very quickly. So think about that, maybe a little nibble here, testing it over today or Monday, that if it starts to show weakness, you can just start a tiny position. But the three things are either wait for the end of the month or wait for the weekly chart next week sometime. If it's starting to get to the 59, 60 area, I'd be pretty sure to say that the weekly chart could very well be a disappointment. Right now to say, you know what, this chart has had an opportunity to go to a new high. The daily has got the W formation. It could very well test the 59.61 area, which is a point and a half or so away. And then if that breaks, it's going to be very negative. So those are the three choices I'd give you. But everything has to be light or you wait. Okay?
Thank you very much. Yep.
Thank you so much for calling. Let's go to, we've got Stacy in Evergreen, Colorado. Hi, Stacy. How are you? We've got a lot of Colorado listeners.
Yeah,
how you doing?
I've noticed that. Very good. Very good. Although I'm waiting for the sun to come out.
Oh, okay. Well, we've got some sun, but it is pretty darn cold. So you'd like to look at?
Star Scientific, STSI.
I don't know what's going on. I'm getting stocks today that I usually remember if I've done them, even if I can't find them on my chart formation. I did this just a little while ago. So my guess is a very light trading just from the monthly chart. Oh, no, it's not very light trading. Gosh, the monthly chart looks like it's either a biotech, it's not Star Scientific.
It's a biotech, yeah.
It is a biotech.
Yeah.
Oh, Star Scientific, I thought it was in some electronic thing or something. Oh, okay. No. So do you have a position?
Yes, I do. Not very far from here, but I'm a little under.
Oh, you're a little under. Oh, so you didn't want to tell me, but you bought it back in October, November.
Yeah.
And you saw it go down to 1.56.
Yep.
Oh.
I also saw it come back up to 324.
Okay, but you see, what I want you to do is this. Psychologically, a 45 to a 55, 60% decline is not pleasant at all, correct? Even if it's a small part of your portfolio, it's lousy. It's psychologically lousy. I'm going to do this. I've got someone in the den here who says, I use their product, Anatoblock.
Yeah.
And he says, I've been stopped out multiple times. Well, I can see why. I hope he's not stopped out of the product, but just stopped out of the stock. Let me explain what I'm looking at. I'm going. If you don't mind, I know that you don't deserve it because you've been patient and you've done what we have to do with biotechs. Bud Rolfs used to say, buy them and put them in the drawer and don't look at them again. So you read in the paper that they've had a most fantastic product review, and then you take them out and you either sell them or you say, oh, fantastic. But let me do this. I think that's great advice. I'm going to suggest something. Because you've been through the it really is agony, even if sometimes for some people it's not such a big deal in price. It's just that it's like thumbing its nose at you as if to say, where, look what I'm doing, and you thought I'd do something different. Not only that, it hinders the psychology of your other investing. I hate that. So I never do that. In fact, all the years I've hardly ever done it. I have had a couple of things that went to zero, but mostly I just do not. I don't take big losses. I know that I can always make back. I don't want to make back too much. So here's what I'm going to say. I don't know if you can see my charts in Tiger TV right now.
Sure.
Can you see what it's bumping up against? It's bumping up against the 200-period exponential moving average, which was once before support, and then it became resistance. It's making the V-shaped pattern. Stochastics at 90%. That's fabulous. The MACD is strong. But I am going to say to you, you might not have heard me say this before. I'll say it to you now. If you've been in a stock that you thought would go down and you shorted it and it went up, or you're in a stock that you thought would go up and instead it went down, but your plan was not to buy three positions, saying, I'm going to buy it at 3, I'm going to buy it at 2 3/4, and I'm going to stick in one crazy thing at $1.80, because that's my plan. I'm going to hold this because I think over the coming 2 months to 4 months, there's a really strong upside potential. You didn't say that to me. You had a position which went against you sharply. You're back to even. In fact, close to being either profitable or underwater, but you're really close to getting back to even.
Right.
Here's my suggestion. And a suggestion that could cost you a great deal of money because this thing's acting very nicely, and it certainly could go right through the 356. Folks, we're looking at STSI. It's Star Scientific Inc., obviously a biotech company, as we've just heard. The previous high up against the 200-period moving average, that purple line you can see in my chart, my daily chart, is at 356.
Right.
Above that, it's got fabulous. It's got this beautiful green candle at 425. Oh, you can go all the way back to 473. Because you went through this pain, I'm going to absolutely insist. You don't have to do it, but I'm going to insist you think about over the next hour or two. I can't see it dropping 20 cents or anything at this particular point. But what I'm going to suggest, it's in leg E. It's looking very good. The 120-minute chart says it's getting a little tight. It could pull back. It could fill in the $3.03 spike down that it made today. Yeah, today. Wow, you must have been nervous about that, huh?
I have faith in the company. I also take the product.
You do? Okay. Well, these are two separate things. Having faith in the company and taking the product, but sometimes it's not business. Their business plan might not be, just might not be good.
I know.
So, okay,
no,
this is what
right.
I'm going to suggest this because I can tell you have faith in the product. The monthly chart looks quite good because it's holding the 120-minute chart. The weekly looks pretty good. I sanction this, but I am going to insist that you at least think about having a stop on some part of your position that makes you feel comfortable now. You do not want to go through this again, correct?
Correct.
Okay. So 303 was the low. You sat through that this morning. Why don't you make $2.99 a get out for some of your position? Okay. You can always add back to it if you have faith and it pulls back to 240 to 220 and then starts to move back up again. You can say, good, I'm going to get back into that position because it's now showing that it's got tremendous support. If it gets away from you, if it stops you out, you've still got that part of your position, because if it suddenly spikes, which it looks like it wants to do, to the it really looks like it wants to get to 350 to 353, 355. That's really the goal that my first goal would be there, and then I'd reassess part of your position, etc., etc. But on one part of your position, promise me you'd at least think about this time putting in some kind of a stop.
Oh, no, I that's why I called you.
Okay. Well, I gave you the scolding that you knew you were going to get. I've been through it. Let me tell you, every single person listening, I'm sure there are very few people that have not been through something like you've gone through on some stock. But I'm just saying, this is your opportunity to say, great, I'm back to even. I can rethink. Would I buy it right now? And I would say to you, I would start a position right now because of the weekly chart, but I would prepare to add it between $3.04 and $2.88. That's where I'd probably put a little more in. So That's what I'm looking at. Thanks so much for calling. I hope it helped you.
Oh, it does. Thank you very much, Basil.
Thank you. That was Stacy in Evergreen, and we're going to go straight after this to Rich in Orlando. And during the break, I'll see if I'm going to be able to even cover some of the things I wanted to cover about taxes, new buildings, small print. I'll be back straight after this break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and we are back. We're back with Rich in Orlando. Hi, Rich. How you doing?
Doing well, Basil, and yourself?
Very well, thank you.
I did want to comment one thing. You had mentioned to the prior caller about when you're in a position and it turns bad on you and it comes back. Really, it's for your own psychological improvement. You really should clear the position and start over again. You had mentioned that to me about a week ago on another position, and I have to agree that psychologically it's a big relief to say, clear the slate and let's re-examine this and let's take another look.
Isn't it an amazing thing? It's just, you get it off and you can rethink it. You can even come back into the trade. But all of a sudden, you've got this weight that lifts off your shoulders. It's so important. Great. Thank you. I'm pleased that that worked for you.
It's an interesting phenomenon, but you're absolutely correct.
Purely psychological. It has nothing to do with your portfolio or anything. It has to do with your thinking. That's all I want is clear thinking. So you wanted to look at?
The FAZ.
So can I look at the XLF, which is the root? Okay.
Sure, absolutely.
So we're looking at the XLF, which has been fabulous. It's just been a solid performer, but not fantastic, but solid. And what it's done is it's made... Now, I've done quite a bit of work. I haven't formulated my exact plan of action in this particular chart pattern, but I'm beginning to get a consensus of what I look at. there's a pattern called the cup and ladle. I can tell that I'm not going to be able to get to the 2 questions that were asked in the den. I will spend Monday. I actually start right off with the 2 questions. They're great questions. What constitutes the depth of the handle in a cup and handle formation? And the other question was, what happens when the right side does not hit the left side in the arch formation? That's in my book, Introducing the ChapmanWave Methodology, which is on sale right now, special at 50% off, and you get 1 month of my opening call for free. That is explained, but I'll go into it on Monday. I'm going to talk about a pattern that's the inverse. It is the handle and cup. I've never actually seen this, and Bukowski has done this incredible study on all the different patterns. I just don't recall him looking at what happens when you get a handle that's a cup, which turns out to be a much smaller cup. What happened is that the XLF went from 1644 back in September, pulls back, and then it goes all the way back up to 16.39. In a peak D, it has an ABCD to the upside in the cup formation. Pulls back all the way to the 200 period. Look how important all day I've been showing this 200 period moving average as support. Here in the XLF daily, it's at 1508. Hits it, gaps up, and goes peak ABCD and makes an E doji underneath the previous 2 at 1628. My analysis says that there should be another little cup formation here, but this one has the potential to fail unless very quickly by Tuesday afternoon, Wednesday morning, I would say at the latest next Thursday, it has to be testing and breaking the upside of 16.28, or it starts to go under the 9 period moving average, and we're looking at 3 to 5 or even 7 sessions of a down move. The MACD is good. Stochastics at 81%, still good. I suspect it's going to make it a little cup formation, just like the Dow's making a potential cup formation. And if that succeeds, and by Monday afternoon, it can get back to almost the top of this candle of 1617, that'll be good. Now, you're looking at the FAZ. Now, the FAZ is the bear side of that. I have a signal in the bear side of that, which the last one made a peak ABCD to the top at 19.78. I suspect what's happening here, there could be a little bounce above the 9 EMA. I would not be surprised, based on the chart patterns I'm looking at, that an arch formation forms, and that 16.80 to 16.87, maybe 16.93 becomes a barrier. So you might have a little more downside on it, but on the XLF, if the XLF turns around by Monday afternoon and is taking out 16.15, it's at 16 now, be a little bit careful, because that FAZ could start to fail. I hope that helps you, Rich.
Thank you so much. Have a good
Thank
weekend.
you very much. Folks, go to the front page. A lot of questions in the den here. I'm sorry I couldn't get to them.